Here's a look at market action and market activity for the day gone by. And after the disappointing May series, the June series today has ended on a strong note. Benchmark indices, both Sensex and the Nifty, have appreciated by about 4% plus in the June series despite the global uncertainties and local news development. For the day, however, markets traded in a narrow and a predictable range, and for a change, volatility was missing. Even though market clearly are lagging any kind of leadership, all major sectors have managed to close in the green. And towards the second half of the day, we did see some short covering in large cap IT, select auto, and some momentum names. For the day, Yes Bank was the top traded counter on both the exchanges, and we saw smart price action in some auto names. So what's the way forward for Indian markets from these levels? The June series is over. July series starts tomorrow. Let's discuss that. To discuss market technicals, Ashwini Gujral, and to discuss the market fundamentals, we have Sajeev Dhawan. Ashwini, Sajeev, gentlemen, good evening to you. Thank you for joining us. Ashwini, first a word on market technicals. Surprise, surprise, the volatility today was missing.
It's been missing for the last 5 days, and the point here is that markets are in an upward consolidation. In spite of all kinds of attempts of trying to take up the market, it's not able to cross 5170. Bank Nifty, is not looking very strong, and the patterns on individual stocks are not inspiring confidence. State Bank, after those great numbers and everybody becoming bullish, is not crossing 2150. So it does not look very cheerful, while you could have a sideways to up kind of a market. But I don't see big downside, max 100, 150 points on the upside, but slowly stocks are giving up gains. Tata Motors heading towards fresh intermediate lows. So these are signs that the market is unable to gain strength at higher levels.
Sajeev, what is your assessment? The fact that we are consolidating in a narrow and a tight range, is that a sign and signal of bullishness, or that is a sign and a signal or a harbinger of a market which is getting tired and toppy?
Well, I agree with some of what Ashwani has just said, that we are in this narrow band. The trade has been to buy around 47, 4800 and to sell or go short at around 5200 levels. It's difficult to see why the markets would sustain higher than 5200 or maybe 50 points beyond that with the current fundamentals. There's way too much news flow. On any day there's either some news coming from Europe, there's US data news coming, there's domestic problems. You've got the new finance minister. There'll be a lot of hopes pinned there. We'll have a lot of stories and rumors about how the monsoon is going to be over the next few months. You've got results kicking in over the next few weeks as well. And I really don't see any of these things being able to change the sentiment. Sentiment is still very nervous. It's slightly better than it was. On the downside, yes, there doesn't seem to be much appetite to sell below 4800. But at the same time, operators, HNIs, savvy investors, they don't seem to be overly aggressive above 5200. And unless they feel that the markets can go to 54, 5500, there will always be selling pressure, maybe 2 to 3% higher from the current level. So unfortunately, we are in this narrow band. It will take a lot of positive news, not just a one-off change in the finance minister, to make the markets break out above 5200 and restore some confidence where investors can come in again at 5200, looking forward to 54, 5500, and the conditions just now aren't there for that.
The question we are asking on this edition of Markets Tomorrow on your screen, clarity on GAR soon, what are markets expecting? Sajeev Dhawan, jump in on that one, react to the question of the day.
Well, there's been some news flow which has come. This has been a policy which has been long awaited by the markets for some clarity on the taxation. If it gets deferred again, it's maybe not the best thing again for the markets. Positive, which I don't know if it's an actual fact yet, is that there will not be any taxation on P-notes, which has always been a concern for markets. So the markets will look to what they get out of it. If the P-note situation is finally dead and buried, that will be a positive sentiment. But these measures, Nikunj, will only be short-term in nature. If the GAR goes through, At some stage, it'll be a positive, but it's not just that alone. We need a lot more positive policy action by the government, and that has to be followed up with conviction levels from market participants actually believing that the government is capable of doing something. So these are all rumors at the moment, and unless there's some clarity over the next couple of days, it'll lead to fluctuations in the market in the short term, but otherwise I think the market will again just look at it, digest it, and move on.
Ashwani, what's the story and what is the setup looking like for cement?
See, clearly CCI has not been able to dent the cement sentiment a whole lot, and that's probably showing the strength of the sector. I would like the stocks to take higher levels out before assuming that they'll go much higher from here. Like Ambuja would need to cross levels of about 180 so that the next zone till about 220 is opened up. Similarly, ACC you would like to see stock moving above 1250. So till that happens, that will probably need the market going above 5200. So they are getting close to resistance levels, but having seen the way they have reacted to the CCI order, definitely these stocks are buy on dips.
Sajeev, even though the expectations from the EU summit are rather moderate, why are global money managers on sidelines ahead of the EU summit?
Because the news flow changes so quickly, there's talk of QE3, there's one day talk of the Greek exiting the euro, the next week they're saying that they're back in it, then the topic of Italy and Spain comes up. So unfortunately this news flow is going to continue, and money managers hate uncertainty more than anything. If Greek left, Spain collapsed, Italy collapsed, fine, at least we can deal with it. Let's have that capitulation and move up from the bottom, wherever that will be. But as I said at the beginning, there's just too much news flow coming through, and these are not normal times. When there's so much skepticism, negative sentiment and lack of retail interest, it's correct that normally that's the best time to buy equity markets, and there will be a 15 to 30% sort of upward move over the next 12 months. But this time is very different because there's so much uncertainty on where the money flows will come from. India has its own set of problems domestically. People are not too bullish on India as they were a year ago. And the lack of clarity in the European situation just adds to that sort of uncertainty. So the way I look at it is that if there is some sort of clarity on Europe, which I don't really think will happen in the next few months, first money will flow still in the European and American markets. And any surplus money will come to India only when there's conviction that the government can take some firm policy action on controlling the subsidy burden, the fiscal deficit, and maintaining the rupee. The rupee at 57 is a serious concern, and the fact that it has not bounced back over the last week or so shows there's still a lot of nervousness out there, and whatever the RBI and the government is talking is not enough to settle nerves.
Ashwani, we had a horrible May, a decent June. What do you think we could be staring at when it comes to the month of July?
It could be, volatile to sideways July, and only post this consolidation is over, you should get a trending move. I don't see a trending move in the next 2 or 3 weeks till some of the results and the picture on monsoon etc. is clear. Even technically, what we have seen is that the market generally consolidates for a couple of months, and the third month, it breaks down or break out, wherever the case may be. Generally, what happens is that through July, the summer months are light, and once we get closer to August, September, the market tends to have a trending move, generally on the downside.
Sajeev, the 3 important triggers for the month of July: A, monsoon; B, Infosys numbers; and C, credit policy. Which event out of the 3 factors I mentioned will be market moving in nature?
I think the key would be credit policy. The RBI governor said that interest rates can come down. There is still room for them to do something. Infosys results, important but not as important anymore, considering that TCS is now sort of overtaken. I think TCS results will be watched much more than Infosys. Anything positive from Infosys will help sentiment. but not be enough to sustain the markets higher up. And the monsoon, you'll see different opinions come in all the time. I don't think anyone accurately predicts the weather anywhere over a period of time, and I think it will actually be credit policy or some measures by the government on policy action over the next few months. If they can do that, that for me would be the most important thing for the markets.
Actually, the capital good index in the June series was up by about 10%. Anything interesting from the infrastructure capital goods space?
You know, it's very difficult to say that in a market that's in a 10% type of range. You know, if something has gone up 10%, whether it could go up further. But the strongest stock is probably, you know, Larsen, and on any decline towards 1270, I think it should be bought. And overall, if things begin to turn, it should get to 1550 fairly quickly. So this is one of the large caps that you can look at. In terms of, you know, the smaller stocks, Punj, Lloyd, etc., they are still fairly range bound and they need more confidence. Maybe Reliance Infra is another one that you should consider around 500.
What about Manappuram Finance, Ashwini? Do you think the big move in Manappuram Finance is now behind us?
You know, if something moves 70% in a week, the first thing you should become is probably suspicious, because nothing really has been, you know, I don't know of any macro trigger which has reversed its trend. I think 3840 maximum is the upside, and now it's too late to participate in that stock. So if you are lucky to get in early, I think the time is coming to take some profit off.
Sajeev, do you want to give this one a guess? What is driving Manappuram Finance?
I have no idea at all, Nikunj. It's not a stock that we follow.
The one you follow, Sajeev, very closely with the magnifying glass is Strides. The stock has done rather well this entire summer. What are your thoughts on Strides now?
Yeah, well, Nikunj, that's I think more than tripled since when we first discussed it. And the point at that stage was, look at the quality of investors you have in a company, look at obviously the fundamentals, and see which stocks are very strong when markets are very weak. There are a lot of stocks out there, mid-caps, which don't seem to fall off that much when things are bad. The volumes are low, people may not have heard of them. In the last one, you've seen several research reports on Strides, Acrolab. They all would have come good because the stock has been on an upward march. But again, when you're making 200% profits, if you've been fortunate enough to hold on, you should really look to take some profit. So there will always be a few dark horses out there in the market, but this one, especially considering it's in the pharma space, has been an excellent performer.